Good morning, everyone, and welcome to our session on lessons from leading in times of crisis. Welcome to ESMT, the European School of Management and Technology. I'm Harald Hungenberg, Dean of Executive Education here at ESMT, and it's my pleasure to host you this morning, host you in the appropriate way at this time as our virtual guest, I should say. It's my privilege to host and welcome one guest in person. Of course, with the appropriate physical distance. Yeah, with the appropriate physical distance that we have. I deliberately don't use the phrasing social distance because it's just physical. And this is our guest speaker of today, Frank Mattern.
Good morning.
Guest speaker is not the correct phrasing because Frank is not giving a lecture, but we will rather use his profound experience in a more interactive way as a kind of like interactive Q&A session. And I will say a few more words about the format in a moment. But before we get started, let me give you a brief introduction of Frank Mattern and his professional experience. Frank has been a senior partner with McKinsey & Company, being with the company and serving its clients for more than 27 years, starting in 1990, incidentally at the same day as another young consultant named Harald Hungenberg started with McKinsey. But Frank remained there until summer 2017. He was elected as a senior partner in 1999, led the McKinsey Financial Group here in Germany for many years. I also founded the global technology organization for McKinsey. And most importantly, he was managing partner of McKinsey's German office from 2007 to 2013 and a member of McKinsey's global board of directors for many years. In all these years, Frank Mattern has gained extensive experiences advising global corporations and in particular financial institutions on topics like strategy, transformation, leadership. And he continues doing this in his new role as a senior advisor and investor of companies and public institutions. Here at ESMT, Frank has supported us from the very beginning, right? As a member of our International Advisory Council. And we are very happy and grateful to have you here today.
It's been my pleasure.
We have more than 100 participants here in our live meeting, eager to benefit from your experiences. Thanks again to all of you for joining. As I said, this session is not supposed to become a presentation, but rather an interactive session. I will guide us all through this through the session by addressing a number of topics and raising questions, interacting here live with Frank. You have the opportunity to, at any point in time, raise questions and bring in yourself in this discussion, ideally by using the chat function that the program, the video conferencing program provides. So I can see, whenever you type anything in the chat function, I can see that question and I would like to integrate it in our discussion as where it fits. And at the end of the session, we have as much time as is needed to address additional questions you would like to bring forward. Yeah, ladies and gentlemen, I doubt that anybody would object against the phrase crisis, talking about what we experience today. I mean, everything has changed. Just a few weeks ago, we were having our normal life, our usual busy life, and now everything that we have taken for granted, I mean, things like meeting friends, taking a train home, doing our regular job, everything has changed. And there's a lot of uncertainty about tomorrow, not only uncertainty about our safety and healthy, being safe and healthy, but about the lives that we want to live. And there's a lot of concern, and that's rising concern about the impact that all this will have on the economy. And I think that's something that we need to address today. I mean, Frank, I think I agree that in this sense we experience a unique situation. But on the other hand, it's not the first crisis that our generation has experienced. And as a manager of a large organization yourself, an advisor to many companies, you've experienced, I mean, starting in 2001, with the dot-com bubble, we have seen the financial crisis and many other things in that sense. Now, the question is what we experience today really unique, or do you see, let's say, such a thing as a typical crisis? So what kind of how would you put that into perspective?
Yeah, let me maybe look back at the sort of crises that I've experienced. Obviously, the current one, Corona, where we don't know how it will go on. The global financial crisis in 2008. You mentioned 2001. There was actually a double feature. That was in April of 2001, the meltdown of the dot-com stocks And in September, there was 9/11, the fall of the Twin Towers. And then there's a number of smaller crises over the last 30 years that we tend to forget in the current mayhem. But at the time, they kept us quite excited. There was the Euro debt crisis in 2011, 2012, where a lot of people were worried that the Euro would fall apart. There was a debt crisis in 1997, 1998, when a lot of tiger Asian countries had balance of payment problems. And so the first lesson, I think, is these crises are actually not that unusual. They tend to happen, it seems, every 7 to 10 years at the moment, smaller ones in between. And they're always very unexpected. I think nobody saw this one coming. Looking back, of course, we could have seen it coming, but we didn't. Not as a health crisis of this dimension, not as an economic crisis of the current dimension. Nobody saw the global financial crisis coming. I was in Davos at the beginning of 2008. In Davos, there's the famous Davos consensus. What do the leaders of the world economy believe? And the Davos consensus, I remembered well, in 2008 was literally not a cloud on the horizon. Not a cloud on the horizon. In September of the same year, Lehman Brothers went bust and we were facing almost the bankruptcy of the entire financial system. And then, of course, in 2001, we didn't see the bursting of the dot-com stocks and, in fact, telco stocks. Remember, Deutsche Telekom had just gone public. As a Volksaktie, people's share went to 100 euros. I don't think it ever saw more than 25 again. And then nobody, of course, saw 9/11 coming. So these crises are always unexpected. I think they always have some common theme. Or they have a theme that reflects on the setting that they're in. And I think the theme that we have in Corona is that we have a crisis of globalization. We had it before. We've seen trade wars, we've seen rhetoric from the American president, but what we see now is literally a breakdown of supply chains, a resurrection of borders for good public health reasons. But I think what we have here is a real crisis of globalization. We'll certainly come back to that.
Yes, definitely.
We had in 2008 a crisis of financial globalization and a crisis of deregulation. Financial markets had been enamored with deregulation, had been highly deregulated, and that came to an end. So it's always important to see the crisis in the specific economic, business, but also political context that they're in.
Before we come back to the question, what is unique in this situation and how to address that, in particular also talk about the managerial implications that has, let's come back briefly to these earlier crises that you mentioned. And the question, of course, is, can we learn something from it? I mean, if there's no such thing as a typical crisis, but anyway, I mean, there are lessons that we can learn that will help us in this situation.
I think we have actually learned quite a lot from the global financial crisis in how the governments and central banks, fiscal and monetary policy should and can respond. And we're seeing at the moment a massive amount of fiscal and monetary stimulus. There was an analysis from Morgan Stanley last Friday, adding all these programs up. You can't really add them up. Kurzarbeitergeld is something different than a monetary asset purchase program. But if you just add it up, it's $14 trillion at this time and counting. So what we've seen and that we have learned from the global financial crisis, the state and the central banks can buffer a breakdown in global demand. In the global financial crisis, it took much longer. It took months until these rescue packages were ready, until they were implemented. It was also much harder because in the global financial crisis, the bankers were rightfully seen as the culprits. They were seen as greedy, as having gotten ahead of themselves. And so for the taxpayer to bail these guys out was very difficult. And one of the, if you want to call it that, advantages we have at the moment, nobody's to blame really. We have a pandemic. The virus may come from somewhere. We will at some point find that out, but none of the economic actors is to blame. And so it's much easier for politicians to come to the rescue. And so what is specific of this crisis is the severity, the steep falls in financial markets, which have apparently, at least in the meantime, somewhat recovered. But what is also specific is that the fiscal and monetary response has been exceedingly fast, largely in consensus, at least in the developed countries, and very significant. And that may give us some hope.
Mm-hmm. As you mentioned already, governments have started to act very fast. Businesses, individuals also reacted. What has been done well so far from your perspective, or where do you see room for improvement, let's say from government, from states, but also from companies?
Yeah, I think, let's say with the sort of the official response, I think overall the official response has been very good. It has been very fast. Maybe it has been occasionally drastic by way of the lockdowns that happened. We will at some point know whether all of that was necessary, but at this time it certainly helped a lot. And I think what also helped is that governments were able to marshal the resources of the state very quickly. We have in Germany, we have a particular instrument called Kurzarbeitergeld, short working hours, where people work reduced hours, and the employment agency picks up between 60 and 87% of the net salary. That's an exceedingly important tool, has been emulated, at least in Europe, a lot. Helped us a lot in the financial crisis, global financial crisis, to buffer the effects on the labor market, and it may well do that again. So I think we have a few tried and tested instruments that have worked very well, and have been rolled out and are being implemented as we speak. Of course, there are glitches. Of course, sometimes it takes too long. Of course, the application procedures sometimes are cumbersome. The specifics have to be readjusted. But I think we need to understand that we are all learning how to respond in this particular situation. Nobody has ever seen a complete collapse of demand due to lockdowns across all industries. I mean, we've never seen that before. We've seen the stop of air traffic because of a volcano in Iceland. After 9/11, we had weeks without air travel because of threats of terrorism. But now we see literally everything shut down, and that's unique, that's new, that's what we are learning. But it seems that the policy response so far has been decisive but also measured, I think, which I think is a good thing.
Mm-hmm. I think the specific challenge, as you already pointed out, the specific challenge of the situation is that we have to balance in a unique way, the safe and the healthy of the people, and on the other hand, the kind of like the life of the economy as such.
Yeah.
And what would be your advice to policymakers regarding this specific balance?
Yeah. I think it's a very important debate, and it's rages in the political and public domain, of course. And I think it's good. There's a good phrase. It's about lives and livelihoods. And we can't trade them off against each other. We can't just say all we do is save lives and we don't pay attention to livelihoods, because that always filters back. And we also can't only pay attention to livelihoods, we know that. Yeah. So I think striking that balance as the pandemic develops, as it proceeds, as it maybe calms down, it may also come back, is very important. But I think at the stage where we are in Europe right now, the question of the livelihoods become increasingly relevant. Mm-hmm. Because with every other week of lockdown, we're losing in travel and tourism, in retailing, we're losing economic activity that we can't bring back. Yeah? And therefore, I think when it seems that lives can now be protected in many countries, not in all yet, but many, I think now we need to protect livelihoods, we need to protect the economies, and we need to protect businesses. And they, of course, need to protect themselves.
Mm-hmm. Is there anything that we in Germany can learn from other countries in Europe? Because when we look at the different countries, we see different situations. We also see different progress, different policies. Is there any advice that you would give to particularly the government here in Germany to learn from other European countries?
I would not want to give the government advice. I think the government is doing a relatively good job. And I think we're doing a relatively good job in Germany compared to other countries. But I think we also see clear thresholds and points where we need to be careful. And one of them, in my view, is the role of the state. Mm-hmm. Because what we have seen, for good reason, is that the state assumes a lot of power, locks down the economy, infringes upon fundamental rights, all under the legal framework of preventing the pandemic or the spread of the pandemic. But I think we also need to be careful about the role of the state in the economy, because it's very easy for the state to walk in or to wade in. It's very difficult for the state to wade out again. It's not only difficult for business to get the state, it's also difficult for the state itself to get out again. So in the financial crisis, the German economy took a stake, the German government took a stake in Commerzbank. It gave both funding, support, and took an equity stake. And it's exceedingly difficult now to get out of that equity stake. There's a current debate in Lufthansa. Lufthansa will have to be rescued by the state. I personally don't see an alternative. I would be very careful about an equity stake. That's my personal opinion, because it's very easy to walk in. It's very hard to walk out. And so I think at the end of the day, the economy must rescue itself. The state is an important actor in that. In Germany, the state is more than 50% of GDP, with all the social security and everything, healthcare, everything that depends on the state. So the state is an important actor in itself. But at the end of the day, the private actors, the private funding markets, financial markets, the private owners need to be in charge and need to do what's necessary and bring their businesses back in shape. With support from the state where needed, but only as far as needed.
Now, you already touched the challenges that this has for companies and for leaders. Let's move forward in the discussion also to the lessons that we can learn from a managerial perspective, and probably starting with the smallest entity, the individual leader and their team. I mean, most of us work remotely. The privilege that the two of us have of being in one room is rare today. So what would be your advice on how to make good use of leadership in those times today for the individual leader?
Yeah, I think in times like this, leadership is particularly important. And I think there are lessons from previous crises and just lessons from good management that I think are relevant and that we can and that leaders can and should employ. And the first is about communication. So you have a situation, a pandemic breaks out, we have lockdown, you don't know what is going to happen to the company, what is going to happen to the jobs, what's going to happen to individual promotions, bonus payments, just everything. And I think it's very important for leaders to address that by way of communication, early communication, frank communication, communicate what you know you can say when you don't know, but it's much better to communicate, to over-communicate than to hide and wait until the situation has become clearer, because I think it's one of the most important jobs of a leader to actually provide leadership, and that starts with pointing towards a direction, saying the truth, how you see it about the situation, about what you know and what you don't know. So I think that's one very, very important aspect. Then, of course, you may have to adapt and you may have to restructure your business. And we know from past crises that there are a few lessons to be learned and to be done well. And one of them is time is of the essence. We know that companies that restructure fast make it through the crisis better. Procrastination is not your friend. So it's very important to act fast, to make use of the support from government and state that is available, to restructure what you think you need to restructure and not wait, because the situation usually doesn't get better, it gets worse. And at the end of the day, any company lives on borrowed time by way of the liquidity it has, and it needs to protect it. So acting fast and decisive, not too decisive, not overly aggressive, but fast and decisive is very important. And then, of course, what I just alluded to, there's liquidity and there's profitability. It's very important for a company to be liquid, to be able to pay its bills. You literally, as a company, you can't survive a single day if you're illiquid. You can easily survive as an unprofitable company for quite a while. If your owners believe in your future, they will back you. Yeah? You can make losses. As a private company, you might even have negative equity. All of that is possible under certain circumstances. But liquidity is key. So watching liquidity, don't believe that just because you're a strong company, you have a strong franchise, you're a profitable company, your balance sheet is also strong. So the strength of the balance sheet, developments in working capital, developments in liquidity, what are the liquidity reserves is absolutely of the essence. Most companies go bankrupt not because they're unprofitable, but because they actually become illiquid. And so that's a very important thing to watch literally every day, and to be conservative about the developments as they unfold, about when volumes and revenues come back, and make sure that adequate precautions from private sources of funding and state sources of funding can be taken.
This is, I mean, definitely something that, for instance, here in Germany, the Mittelstand and the smaller companies are struggling with, because, I mean, nobody has expected any kind of event like this, the pandemics as such. So although there has been equity built over the last 10 years since the financial crisis in most companies, liquidity and a sufficient amount of equity is probably a specific challenge for those companies.
Yeah, I would say the good news is that the German economy, the world economy in general, and the German economy in particular, fell into this crisis in relatively good shape. Companies were strong, revenues were growing, liquidity was usually quite strong. Obviously, it depends a lot on how individual companies manage it, but overall, the German economy and the world economy was comparatively strong, and that's one thing that helps us. What also helps a lot are the government programs that are now in place. KfW support in Germany, support from state development banks. In other countries, in France, for example, you have BPI, which is a similar institution to KfW, which also provides support. So talking to your bankers and applying for these sources of funding in a timely way, because they also struggle, they get overwhelmed with lots of applications, is another important part. And I think one should just swallow one's pride and get all the help you can get. There's nothing wrong with asking for KfW liquidity support, even if you're a proud, businessman and a proud Mittelstands company with a long tradition. Get the help you can get, and make sure that the company stays liquid, and you can tide over the bump in the road, a massive bump in the road that we're experiencing this year.
Before we move forward, I would again like to encourage you to, if you have a question that you would like to bring forward, just use the chat. We are following that, so you can at any time bring in the specific issues that you would like us to discuss. But Frank, you already mentioned something which I would also like to call the mindset of people in this kind of crisis. You talk about speed being essential, of course, but then there's also the question, how should we react? There is a natural tendency to be rather conservative and protecting everything. What kind of mindset would you expect from a leader in this situation? Is conservatism helping, or what do you suggest?
I think every leader has to work with the natural strengths the leader has. Yeah, and you have people who are by nature optimists and charismatic, and that's a great strength, in particular in times of crisis. You have other people who are by nature conservative, and as somebody said to me a long time ago, you won't turn a lamb into a lion. Yeah, so I think use with the natural qualities you have, but I think it is important to provide leadership and to point towards a direction, to point towards a future, to give people some sense of continuity, and to react to signals that are visible in the market in a measured way. There are waves of optimism, there are waves of pessimism. They tide through financial markets, they tide through social media, they tide through the public media, and not get swept away with either one of them, but retain your judgment and use what your personality gives you by way of natural character to provide continuity and reassurance to the people that depend on you and look to you for that guidance.
I just recognized that I misled you into raising your questions into the chat. Obviously, of course, it's the Q&A part that you can insert your questions. And we already see there's a number of questions that will feed in the discussion. For instance, there was one question actually that we should have looked at the beginning when we were talking about the government and its influence and taking an equity stake. And you mentioned already the Commerzbank case, where the government took an equity stake. And I think it's an important question. Was that a positive influence or a negative influence on Commerzbank based on what you have observed? Because that would also help us to better understand what is happening with Lufthansa right now.
Yeah, I would say, first of all, that was not, and it's a dangerous word these days, there was not really an alternative. I hate the word alternativlos, I hate it, because It's rarely true, but in this particular case, it was true. Without the backstop of the government, both in terms of funding and at some point in terms of an equity stake, Commerzbank may well not have survived. Yeah, we will never know, but it may well not have survived. Yeah, and so I think to that extent there was no alternative. I think the development ever since for banks in general in Europe has been difficult. It's a long story why that is the case. I suggest we leave that for another video conference. It's a long story. But of course, without the state, I think the institution would not have survived. And so we can't, so we have to call it positive. It is positive. Yeah? And I think the state has been, as far as I can see, as an outsider, in the case of Commerzbank, has been measured in its influence. I don't think the state has tried to have a lot of operating influence on the bank, which I think would have been bad. So you can say the state has been a good owner, has been a passive owner. But the idea, of course, was that the state would be a temporary owner. And that is currently, it's currently hard to see how that will end. And so I think that part of the equation didn't quite work, at least not yet. But I think the German state in this particular case has done well as staying in the background and being a passive guardian of the institution and of the investment that it made, and also, of course, of jobs and the role of Commerzbank in the economy.
Mm-hmm. Another question that I see here that also relates to what you already said is the success factors to kind of like not only manage the existing situation, but probably to also get stronger out of it. And you mentioned, of course, liquidity and equity and all these kind of things. The question is, what do you think about the ability to adapt the mindset of the management? So fast decision making, kind of like these attitudes. How important are those?
Yeah, I think obviously they are important because, as I said, time is of the essence as you adapt, as you restructure. It's important to be fast, but not to be too aggressive and not to go overboard. But I think what is also important, I talked about a measured view of your situation in the future. It's also important to see at some point, are there opportunities? Because there are always opportunities. And the Americans like to call this playing the offensive, as opposed to just playing the defensive. So at what point do you, for your institution in your market, see an opportunity? It may be an opportunity to go into, which is very popular at the moment, healthcare products. So we see people all of a sudden sewing masks. Maybe that's important at the moment. It's also a little bit amusing. But there may be other opportunities. There may be opportunities to gain market share. There may be opportunities to, at some point, take over a weaker competitor and become a stronger institution and maybe keep that company alive. So I think I would probably be careful at this time, as we do not yet know how the pandemic will unfold and how long the current economic problems will persist. But in a few weeks, a few months, we will have that clarity, and then to play the offensive in addition to just defensive moves, I think is very important.
Mm-hmm. I think that's also a lesson that we learned in the financial crisis, that those companies that were actually offensive, kind of like having the necessary stability to play an offensive game, came out of the crisis way better. That leads to another question, which we saw also in the financial crisis. We saw that those companies that were financially stable, of course, used the opportunity to invest in their competitive position and came out stronger. And at that time, there was kind of like, in particular, diversification was questioned, addressed in a new way, because diversification helps you to reduce risk. It helps you to position yourself more stably.
Yeah.
Now, when you look at that experience and compare that to the situation that we're in right now, where we see large organizations restructuring, spinning off entities, focusing on what they call a core activity, do you think that we see some kind of a renewal of this idea of diversification again?
I would say I'm a bit skeptical. I think focusing on the core, focusing on what you're really good at, has proven a successful competitive and management strategy over many years. Mm. And few institutions are good at many things at the same time. I've never seen that. So I think to have a strong sense of what is your core business, what do you focus on, not get distracted by other things that may come along, continues to be a good management practice. I think we have another change that is happening. We had a thoroughly globalized world economy, and globalization will not come to an end, but it will have to be adjusted. quite frankly, it was in the process of being adjusted already. In the presence of trade wars, in the presence of a large power animosity between the United States, China, Russia, the global economies that we thought we had in the 2000s has already ceased to exist. Now we're seeing that we need to be aware that maybe borders close again, that economic blocks may shield themselves off. And so I think there's a need to adapt your supply chains. The perfect just-in-time world that people were dreaming of no longer exists. There is a need to have more onshore production. There is a need to have more resilience. I wouldn't call it diversification, but resilience. And so I think to pandemic-proof, if you will, your business model, because first of all, we seem to know that this pandemic will last for quite a while, certainly this year, maybe 2 years, it may come back, and it may not be the last. Yeah. So I think working on the resiliency of your business model and your organization, I think is a very important aspect.
We will come back to this question: what will be the impact of the situation that we're in right now, the long-term impact, and where do we see changes that might last? But I have a couple of questions here that are quite interesting and also related to leaders and their roles in the organization and the managerial lessons coming from that. For instance, there's coming back to what you said about the optimism and leadership and optimism and looking forward and taking also the crisis as an opportunity. But then at the other end, we have, for employees, the outlook is not the brightest. And the question is indeed how to motivate people in a situation like that, where probably the negative outcome is so obvious and the uncertainty is so high. What's your take on that?
I think, a leader always has to tell the corporate story. Yeah, every organization has a story. BMW is about Freude am Fahren. Yeah, it's become their claim. And an organization may take a hit. It may go through a deep crisis. But let's not. But I think one thing is very important. It's clear the pandemic is temporary. Yeah, it's clear there will be an upswing. The Council of Economic Advisors of the German government said the economic capacity of the German economy, or the capacity has not been destroyed. The workers are still there. They may be sick. We may lose some people, but the productive capacity of the German economy, of the world economy, is still there, and so it will come back. Now, it will come back somewhat different. Travel patterns may be different. We'll all do a lot more Zooming and video conferencing than we already did. We'll see how the consumer climate will brighten up again, how long that takes. But I think, this is all this discussion about the V-U-L-shaped recovery. There's no reason that I can see to believe that we will not have a recovery, in fact, a strong recovery. The world economy will look somewhat different, but it won't look dramatically different. And so I think leaders can point to a future. They need to point to a future. I think it's the job of the leader to explain what that future looks like, maybe how different it may look like, or maybe how it may not be that different. And that's specific to every organization. But I think it's very, very important for leadership, and it's the essence of leadership to provide that continuity, to provide that perspective, and keep it even if bad news pile up.
Mm-hmm. You already hinted on the question of recovery and the different shapes that are discussed there. So probably let's use that as a lead over also to the question, let's say, on the more broader outlook and conclusions that we can take from that. Of course, we do not know what kind of shape of recovery we will have. There's a lot of uncertainty about that. But anyway, could you make a comment on what you think is more realistic or less realistic and what the implications are?
Yeah, I think there's all kinds of voices and views on that. The equity markets seem to believe that the worst is over. Equity markets fell about 40%. That's actually less than they fell in the financial crisis and less than they fell in 2001. Mm-hmm. And they have since recovered quite a bit. And so the equity markets seem to believe in a relatively quick recovery. I think it will all depend, and the economic forecasts all depend on how long the lockdowns last, and how quickly activity, the consumer climate comes back.
If I may, just because there's a question that's connected to this, the point that you're just making about the equity markets. Do you think that this is a mismatch between the real situation of the company and the valuation at the stock market right now, or is this something that...
I wish I knew.
Yeah.
I wish I knew. I have to say I'm personally somewhat skeptical. I mean, we've seen the fastest collapse of the equity market we've ever seen, the fastest, but it wasn't the deepest. And we have seen a relatively quick recovery. Now, you may tell yourself that if you, I mentioned about the sum total of all the programs, the Morgan Stanley analysis, the 14 trillion.
Yeah.
There's one view, and the equity market seems to have that view, that that is enough to fill the hole, if you will, to fill the hole in global demand through all these programs. We'll end up with a lot of debt, fortunately at low interest rates at the moment, so they may be affordable. Yeah? But that's one view to have. And that's what the equity market appears to believe. I'm personally a little bit more skeptical. I personally think we'll see the equity market also decline again, maybe in the second and third quarter as bad news come in from companies. But it is encouraging that that a lot of people believe who make investment decisions, who stand behind companies, who are willing to put up fresh money, seem to believe in the recovery.
But I interrupted you when you were talking about the shape of the recovery and the development there. So,
yeah, I mean, what do we know? In reality, we don't know. I think the equity market believes in a V-shaped recovery. You just heard me be a bit more skeptical. I absolutely do not believe in the doomsday scenarios that some people like to put out. I mean, there are people who predicted 25 of the last 5 recessions, and that can be a business model for some. It's absolutely not my belief. I think we will absolutely have a recovery. Will it be a very quick one? Will it be a somewhat a longer view type? We don't know. Quite frankly, it's not so important. I think what is more important is business by business, industry by industry, what's happening to your demand, what's happening to your customers, how can you adjust, how can you maybe take advantage of the situation. I mean, we know that digitization gets a massive boost at the moment. We were all waiting for that. So let's use whatever good aspects we can find in this crisis and work with them, and then see how we can demand back up and get demand back up and get production back up and activity back up.
Now that already leads over to I think another area that we need to touch on, that is the kind of like the impact that this crisis will have on the way that we work, that companies operate. You already mentioned digitalization, globalization are developments. Yes. Can you elaborate a little on that? So what do you think are the broader business and economic developments?
Yeah, I think, these crises often accelerate pre-existing trends. They rarely create something entirely new. And so we had a pre-existing trend towards digitization, working from not out of the office. Now we say from home. We didn't think it was going to be from home, but working in a mobile way. And we see a massive acceleration of that trend, and that will persist. And it's probably a good thing. I talked about the role of the state, where I'm worried that the state may assume a very large role in the economy and in business, and that may, as it usually does in the longer run, stifle innovation, stifle competition. I think there's another trend which has also been underway, which is consolidation. Large companies do better in this crisis because it's easier for them to apply for aid. They are systemically relevant. We cannot let them go under. I'm trying to avoid the too big to fail language, but they're systemically relevant, so we won't let them go under. And so bigger companies have a higher chance to make it through the crisis, and that's another force that will drive consolidation. Now, consolidation is maybe welcome if it enhances efficiency, but we know that at some point, it goes back to old Schumpeter, at some point it will stifle innovation and progress. So I think we'll see changes in the structure of industries and markets, adjustments, accelerating pre-existing trends, and we'll have to watch some of them.
Is globalization or deglobalization one of the trends that already has started? And what is your take on, you already mentioned earlier on that we have supply chains, global supply chains that probably need to be restructured.
Yeah, I think, globalization has been, and I continue to say this, has been a massive force for the good in the world. It has made the world economy much more efficient. It has lifted hundreds of millions out of poverty in China, in Africa. And it has acquired a bad name in the meantime, in the public, the social debate, but globalization is fundamentally a good thing. But we have to adjust it to today's realities. And today's realities are not, there was a famous book in 2005 published by a gentleman called Thomas Friedman. It was called The World is Flat. Yeah. We've all read it. It was about a world where borders are open, companies can operate around the world on an open, flat marketplace. That's fantasy. That world never existed. It certainly doesn't exist now. Mm. So globalization will take a step back. We will have to adjust for good reasons. We will also have to adjust for some bad reasons. But I think we have to continue to believe in division of labor, in focus, in global supply chains, in specialization. Therefore, globalization will not come to an end, but it will have to have a stronger regional component. That seems to be obvious.
Mm-hmm. One of our visitors our guest has a specific question in that context, referring to companies like Japan, South Korea, that are basically requesting or supporting their national companies, their flagship companies, to move out of China in particular. Is this something that you consider sensible? Would you also recommend something like that for German companies?
I think I talked about the age of superpower conflict that we now have back, and it's very obvious that we have superpower conflict between the US and China, and that's a fact of life. And I think we should not be naive about the economic interests of these superpowers, not the Chinese and not the American. The economic interests are strong, and they are, at this day and age, they are nationally oriented. So I wouldn't say we need to move out of China. Production needs to move out of China per se. China is, for many industries, the largest market in the world for the automotive industry. And it's a very important place where components are made. Most of the electronic hardware is now made in China, in Taiwan, or in Korea, or to some extent in Japan, in Asia. And it does not make sense to turn all of that back. But I think we cannot be naive about the intentions of state actors. We cannot be naive about investments by foreign companies. I think it's a controversial subject in German industry, to what extent we should be raising borders to foreign investment. Yeah. Fundamentally, it's a bad thing because you want investment to flow freely, but we have to be realistic and skeptical about the intentions of particularly companies that are close to the state when we talk about some of our strategic interests, some of our strategic industries. Mm-hmm. And so I think we have to find a way. We can't protect everything. We would be making a mistake if we declare everything strategic. We have to somehow follow this path and find the best way forward.
Is there any company that you would kind of like refer to as a role model in terms of its reaction and also kind of like setting up its supply chain, its operations, adjusting it, or having adjusted it in a way prior to the crisis that makes it more resilient? Any role models that you would refer to?
No, I would say I wouldn't point to a specific company. I think the automotive industry broadly has not done so badly. Yeah, it has a good mix of regional and national and global manufacturing footprint, and of course supply chains have broken. But it seems that production can be picked up relatively quickly, and that's encouraging. So, as I said, the crisis doesn't create anything except from the pandemic nature of it. It reinforces pre-existing trends. It accelerates pre-existing trends. It doesn't dramatically change them. And so I think people were adjusting to different realities already and now have to adjust further. And the faster you do this, back to my point about time being of the essence, the faster you do this in a measured way, I think the better.
Mm-hmm. There is also a question regarding the management tools and methods that we're using. That's you were referring to leaders and how leaders have to adjust, but then of course the tools, for instance, strategic planning tools and methods that we use. Is there anything that we can learn from the situation that we're in?
I'm not a believer in magic wands for managers, and of course management consultants promote theories, as do management professors, and further the innovation of the art of management. I think it's not about the tools so much. I think it's about a mindset. It's a mindset of openness, of curiosity, of having your antennas up, maybe even your threat receivers to react to signals, weak signals. It's important to have your own view. I think it's very important for a company and leader to come to an own view, not just ape somebody else's view. What's your own view of the future? And to set that in contrast with other people's view and keep an open mind, because we don't know what the future will bring us. We've rarely experienced a short period of time where so many things have changed so quickly, unexpectedly. And so I think we have to be humble that we won't be able to see what's coming very clearly. But if leaders keep an open mind and immerse themselves in as much information from the media, from the financial market, from advisors, from management professors, I think, and draw the sum total at any point in time and adjust it as they go along. I think that's what's needed, and I think that's also the role of strategy departments of strategic planning, to keep on adjusting in a fairly flexible way as opposed to in a mechanical way.
I heard you in a different context saying once volatility will remain.
Yeah.
So that requires, of course, more an attitude and then an instrument.
Yeah.
I have a couple of other questions that are related to money and financing again, and would like to come back to that. For instance, there's a question whether this over-reliance on debt financing that we see today and all the money that is into the market might lead to a banking crisis. So very challenging question again. I mean, if you knew, you wouldn't be here probably. But
well, no, I would say, I mean, we have unprecedented levels of debt in the economy, but we should not be surprised because interest rates are low. If interest rates are low, you can carry a lot of debt. You can buy yourself an expensive house. You can pay a high price for a company, and you can fund a large operation at very low expense. And you can even run, as a finance minister, a large budget deficit easily, when the German finance minister literally gets money back if the finance ministry issues new bonds, 10-year bonds, gets money back. Yeah? So yes, we do have a lot of debt. The good news is it's affordable. It's affordable for the state. It's affordable for companies. In some way, we are kicking the can down the road in terms of the levels of indebtedness. We don't know exactly how we will actually at some point roll them back, but for the time being, I don't think they're the problem. The financial system, in my personal view, again, I don't know what's coming, but in my personal view, the financial system has never been so resilient. It's very resilient from a liquidity point of view. It's very resilient from a capital point of view. Yes, the capital levels will be stretched. We will see credit losses piling up later in the year. And that will challenge bank balance sheets and equity levels. But one of the good news in this is that the financial system may not be very profitable, but it's very resilient, it's very strong. That certainly everybody learned and had to learn from the global financial crisis, and I think at the moment that helps us.
Mm-hmm. And the enormous amount of money that government and central banks are pouring into the system, do you think that will have a lasting impact?
Well, as I said, we're kicking the can down. It will tide us over, hopefully, and debt levels will rise a lot. Most economists seem to believe that they are affordable as long as interest rates are low. We were hoping that interest rates would rise at some point. It doesn't seem to be happening anytime soon. And as long as that is the case, high levels of indebtedness will stay possible and fundable. Mm-hmm. At some point that will change, and that will trigger another adjustment. And we have to worry about that at some stage, but quite frankly, not now. Mm-hmm. I think now we need to tide over. The day when interest rates come up, the day when inflation comes back, I think it's not very near. And therefore, let's grapple with the crisis we have, solve the problems we have, see where we are, and then do the adjustments we need to do. They will not be easy because we don't really know a way out of all these debt levels. The only thing the economists can say is if the economy grows faster than the debt levels and the interest rate, that helps, that can be a solution. There are some solutions, but they're very long term and they're not at hand, but I would not worry about this now.
There's a lot of interest in the various different topics that we're addressing. I mean, the managerial perspective, the leadership perspective in particular, but there's also interest in kind of like the overall economic aspect and the governments and how they influence and might be helpful in this situation. For instance, there's an interesting question here also addressing the EU and the fact that, of course, Germany is part of the European Union, and we see borders being closed, we see EU trying to support countries, we see countries trying to support each other. So the question here is indeed, what do you think is what can the EU contribute, and do you see a certain risk for the EU to fall apart, to suffer from that development?
Yeah, I would say that the crisis is only a few weeks old. The EU has not had a good crisis, because the way the EU is set up, public health is the domain of the national states. And therefore, the national states took control and reacted and adjusted and erected borders. And I think we mostly associate the EU with open borders, maybe even more than with a common currency. And so to lose the ability to travel, I think, is a massive negative. It was unavoidable, but it's a massive negative. I think the EU has to find a role now. The EU has to find a role to coordinate the states. The states are struggling to find a way out of the lockdowns. It appears that it was easier to impose them than to lift them. It's clear we have to do this in some coordinated fashion. And I'm hoping that the EU will take that role and provide that leadership and provide that coordination. But I wouldn't count the EU out. I mean, when Brexit happened, everybody believed it would weaken the EU. The opposite happened. Everybody believed the EU would squabble over the terms of Britain leaving. The exact opposite happened. And so also the EU walked into this relatively strong, out of the unfortunate, in my view, Brexit experience. But now I think the EU needs to find a role to stay relevant, because we are all paying an EU budget. We're paying an EU household of close to 100 billion. And we will ask ourselves, what do we get for it? And I think one of the most important things has been freedom of movement within the EU, the famous 4 freedoms. We need to get them back as soon as we have, and I think the EU needs to fight for that.
There's another question related to this about the countries, the economies the global economy and the situation that they're in. And the question is there any perspective that you have on the question whether there are some countries better equipped to weather the storm than others, in particular Europe, China, US, this kind of triangle that we're often discussing?
Well, I think this is a very political question. I can only give a very personal answer. I think it's a mistake to believe that strong governments and strongman governments are good in the crisis. They may claim to be, but I have my doubts. I think an open, free economy and an open, free society at the end of the day will be honest with itself, will put the facts on the table that are undeniable anyway. And a regime that denies the spread of the virus, like it seems China did for a while, like it seems Iran did for a while, is not doing well. Now, being an open society and a free liberal society per se is not enough. There needs to be leadership and coordination. And countries that went back and forth seem not to be doing well. I would say you can see that in the UK, you can see that in the US. The US is a strong country. They will at some point find their direction, but they're struggling mightily with, how to deal with the pandemic. But on the whole, I'm a firm believer that since the facts need to be on the table, the reality is undeniable. We have to face up to it, and a free, open economy and a free, open society and free, open media will do better at that.
There's an interesting question also relating back to the comment that you made earlier on, that it's difficult. When we look at the influence of states and they buy equity stakes in companies, it's difficult to get out, you said. And we discussed the Commerzbank experience and all these kind of things. On the other hand, there is, in the United States, actually, the government was investing a lot in equity of companies, took temporarily equity stakes in banks, for instance, without major difficulties. Is there anything that we can learn from that experience?
I think, first of all, I would agree with that. I think the US did better at managing the global financial crisis, largely by forcing the banks to recapitalize themselves from the state. And then the banks worked very hard and very fast to pay the state back. And that seems to have been a better experience than the European and German experience, where German government did not force the banks to take state money. Deutsche Bank famously refused. And we had a lot of procrastination. But I would say that's an experience that may be unique to the financial crisis. In the financial crisis, the backstop of the state, an immediate, unsurmountable backstop from the state, is important to ensure confidence of financial markets. That's in a financial crisis. What we have here now is not a financial crisis. We're not having a financial crisis. We're having a pandemic. We're having a severe recession. That's not a financial crisis. Therefore, the immediate creation of confidence from a state bailout, I think, is less important here. And so I would not take that lesson from the financial crisis and apply it now.
There is another question about this, what you already mentioned, the necessary fast reaction. And that often means, of course, there's a certain amount of restructuring, short-term restructuring needed in order to adjust to the situation. So what kind of restructuring do you think makes most sense in this kind of situation, if an answer is possible to that question? And connected to that, the question, how can companies best balance this short-term reaction with the opportunity to kind of like in a medium-term perspective to recover and grow again?
Yeah, I don't think there's an answer to that question that is not specific to an industry. I think you need to look at this industry by industry. But I think what we basically have is we have a lockdown, we have a stop of revenues, a stop of demand while costs continue. And in countries where we have the availability of state support for workers, Kurzarbeit in Germany, Kurzarbeitergeld, that's massively important, because otherwise the company literally runs out of money very, very quickly. So I think to react fast and apply for state support, run down your production to avoid a build-up in working capital. That's what the automotive industry did by shutting their factories. I think these measures are very important. And then I think it's very important to look at how does demand come back. I think it's important to be back in the market. Restaurants need to open, even if they don't have a lot of business, so they're open. You need to demonstrate to your customers that the brand is relevant. We are still here, even if we don't have a lot of business, even if we don't have a lot of volume. So I think it's very important to open quickly, but then obviously to adjust the scale of your operation to what's actually coming in by way of demand, and then see what can be done to stimulate demand. There are things to stimulate demand. You can lower prices, you can do promotions, there's all kinds of things that can be done to stimulate demand, at least to some, and accelerate the coming back of demand. And I think that's what people need to think about. And a lot of curiosity and a lot of creativity now needs to go into that part.
We have addressed most of the questions that were raised, at least if I follow that correctly here, what you have put forward. There's a number of very concrete questions that we probably could follow up. You already came across this notion of talking to customers, very important at that point in time. There was another question about is this society, from your point of view, will the society in the future care more about preventing these kind of developments?
What do we know?
Difficult to judge.
I mean, could we have avoided the pandemic? It's very hard. It's very hard. How? I mean, we didn't. Well, we could have seen it coming earlier out of China, but we could have taken it more serious. I could have taken it more serious. I didn't. Yeah, and so did most other people. So I think we learned from that. I think it's another humbling experience, but I don't think we could have stopped it.
Yeah. But what we know is that there will be probably not an after the crisis. So probably as a final comment from your side, if I may, when you look at the time that will be kind of like after the crisis, it will be, we're looking sometimes for the new normal. Will we see a new normal, or will be there a fundamental change that you see that will remain?
Yeah, I personally believe the word new normal has been overused. Yeah, we'll see a different normal. Yeah, we'll see, as I said, we'll see different travel patterns. We'll see more distance working. I think we'll see different levels of investment in public healthcare. I hope we're going to see higher salaries for healthcare workers. I think they've been shamefully low for a long time. So I think we will adjust. We will change the way we operate as a society and as an economy, and then somehow we will move on. I think the word new normal is overused. I think it dramatizes the changes. We will live to learn with the pandemic. Yeah, we've had pandemics before. We seem to be doing better in managing this one. Hopefully it's a less severe one than others we had in the past. But I think we will adjust, we will change our operation. I would stay away from the word new normal.
Mm-hmm. Yeah. Angela Merkel said a few weeks ago, and probably as a last question for that I would like to raise here, in her appeal to Germany, and others have echoed this later, she said that our ability to come through the crisis will depend a lot and primarily depend on each and every one of us. So on our behavior and how we kind of the attitudes that we put forward. So what would be your personal recommendations to us as individuals in this situation?
I'm not sure I'm qualified, but I think we need to get our daily lives back. Yeah, we need to adjust, we need to change behavior. But I think the plans we had made for ourselves have not been invalidated by this. Maybe they have been delayed, maybe they become more difficult. But I think we should pursue this. We should pursue the future that we were building for ourselves, and then I think we will also win that future.
Very good. Thanks a lot, Frank. Thanks a lot for joining us today.
Thank you
for sharing your experience, providing valuable advice to all of us. And among all the critical developments that you mentioned, I sense a fundamental optimism that I think should encourage all of us. That's great to hear. Many thanks to all of you for joining and participating. We're looking forward to seeing you again, hopefully soon, hopefully in person here on our ESMT campus. Until then, stay safe and healthy. Frank, stay safe and healthy, all our participants here. Take care of yourself. Hang in there, you can say, hang on in there. Yeah, and thank you and goodbye. That's from our side.
Thank you very much for your interest.